Instead of saying, "Hey, folks," isn't that what I usually
What are you
say?
going to say goodbye? Right off the bat. See ya.
Greetings, Earthlings.
Yeah.
So we are going to talk about some breaking news as well as the what we think is the future of short-term rentals.
That's right.
Okay.
Right after this.
And thank you.
Yeah.
So this is Bill, Wendy, and Jonathan with Carolina Capital Management. Thank you so much for joining us on the Real Estate Investor Show, Hard Money for Real Estate Investors. We are, well, like I said, Carolina Capital Management. We are lenders in the Southeast for real estate professionals. If you have a project that you'd like to get funded, go to carolinahardmoney.com and click on the Apply Now tab. If you are a passive investor looking for passive returns, click on the Accredited Investor tab. Don't forget to like, share, subscribe, hit the bell, and don't forget about Wednesdays with Wendy.
Ooh.
So Wendy devotes an hour per person, or is it 30 minutes?
It's 30 minutes per person for the first half of Wednesday.
Okay.
And we are
Every Wednesday.
booked through
So there's a
the
link
second week in August now.
on her calendar.
Wow.
Like she said, she's usually booked up a lot in advance. She will be taking a vacation. She's allowed. So you may have to book a little bit later in the year.
Yeah. But it's good. I promise you. I
Mhm.
promise you it'll be worth it.
Well worth it.
Please do it because it really feeds me a lot and I love it.
Absolutely. And speaking engagements, we're going to be at Quest Expo. In Houston, Texas. And if you'd like to get a discount, Fairman 30 is the discount code.
Mhm.
Uh,
Then that
30% off.
other event in Punta Gorda is slap full. There is a waiting list now.
Nice. They need a bigger spot.
Yeah, well,
Mhm.
they've maxed out on the space that they could use. So if you want to get on the waiting list, you can do that, and that's over there in the chat box. But that'll be good. It's really about new construction and modular homes and mobile homes and that kind of
Yeah,
thing.
affordable housing.
Yeah.
Yeah.
Speaking of chat box, we have a chat box. It's
Yeah.
over on the right-hand side of your screen or underneath, depending on the platform that you're viewing us from. Anything else we got going on?
No, but I will tell you that Kim and I went to see Bonnie Raitt last night in concert. I love
Nice.
Bonnie Raitt.
Nice.
And we walked in there and we both looked at each other. We're like, man, everybody here is so old. We've realized that we're now in that older sector. And there were silver hairs and lots of canes around and rocking and rolling to Bonnie Raitt. And I thought, wow, that's us. Everybody else around you looks so old, right?
So,
Mhm.
so apparently you guys are the only ones that dye your hair.
Hey, this is all natural.
Awesome.
It was really cool though. Lots of fun.
I
Lots
bet.
of fun.
Well, that's good.
Did you say that you had some breaking news?
It's broken.
Breaking news.
I didn't know that they knew it was your
It's a
birthday.
little early, but I'll take it.
It's not too early. June 6th.
Which is what? Tuesday
Can you?
or Monday? I don't know.
It's
Doesn't matter. When you get that old,
4 days from now because today's the 2nd, just so you know.
thank you.
Yes, you look good for 70, I'll tell you.
Mhm. Real good. 71, isn't it?
Yeah.
Okay, so breaking news. Did we already
This
do
just
that
in,
one?
Bill's up.
That's it.
No, we have
Bill is a year older.
we have a lot going on right now in the economy, obviously. So they had the second reading on what was it? Second reading for production for
And employment.
employment,
Mhm.
and it was minus 7.3%. Typically, our labor produces a lot
Surplus.
more.
Yeah.
And we had a 12.3% increase in labor cost, and we had a negative 7.3% production number.
Yeah, and that's not here at our office. That is, of course, nationwide. We do much better than
So
that
you're
here.
paying a lot more for labor and you're getting a lot less out of it.
Yeah, kind of weird, isn't it?
Now, it's not all lazy people. And so if you read deeper into those numbers, I mean, there's a lot of supply chain issues going on, and you're
Sure.
having to wait for stuff, and you're just not as productive. And you might get back to those folks that are saying that, working from home isn't as productive as they think it is,
Right.
too.
Right.
And then you're
Materials
you're
and stuff.
poaching workers from competitors.
That's
and
right.
You're paying them a lot more to get them,
Mhm.
and then are they really as productive
worth it?
as you think they are?
Yeah. Are they worth it? For sure.
Also, the ADP employment number came in, and they were expecting 300,000 new jobs created. It came in at 128,000.
Wow.
So I don't know what tomorrow is the reading for the government numbers, but this is ADP. ADP is the nation's largest payroll company,
Mhm.
Yeah.
and that still gives you a good handle on what's going on. Things are starting to slow down. I know Silicon Valley is halting hiring, but keep in mind, a lot of these companies were bloated anyway. They
Yeah.
were way overvalued.
Tech companies.
A lot-
Yeah.
yeah, a lot of them. There's a lot of them that weren't making any money in the first place, and they were using all their money just to constantly grow and not be profitable.
Mhm.
Now, don't get me wrong, Google and Facebook and Meta, Amazon, they're all profitable. Microsoft, you got to put them in there too, but they're all putting hiring on hold right now too.
Yeah.
So things are slowing down. The other thing, the 30-year fixed rate mortgage actually dropped a little bit. It's 5.09% from
For the average.
5.1. So they're kind of stabilizing a little bit.
But we anticipate a rate hike of 50 bips in what, 2 weeks? Two and a half
Well,
weeks?
Again, those are short term, and you might get a little bit of a bump in long term after a short term rise, but
You will.
typically it doesn't adjust to the same on the long term.
No, it's not. It's not apples to apples. That's
And
for sure.
as the economy slows, long term rates tend to go down anyway. Tend to.
Yeah.
Tend to.
So
No.
Randy Vetter, friend of the show,
And that's
is very nice.
personally.
Always sends us some information, and I want to kind of promote this. So could you put Stessa up on the screen? So Stessa.com, it's a company owned by Roofstack. So
Roof stock.
Roof
stock.
stock. Yeah.
So they're in the rental property, single family and multifamily rental property business, but they have free software, management software that you can utilize. I'm sure you're not getting all the features that they offer with the free version, but might as well try it out.
But they put out a
But-
good monthly
Yeah,
or
they-
daily,
They
weekly.
have a nice newsletter. And
Yeah.
the one I want to talk about is Recession Red Flags. And then I'm going to obviously have some commentary of my own, as well as the rest of the folks here, if I take a breath.
Yeah. That would help.
So they're quoting several experts in the industry talking about
Me and Jonathan.
the economic cycle is slowing down. They have a decline of 12.2% in Q1 of GDP. And so that was
No, they did.
Q2 of 2021
Was 12
to,
point.
to a 3.5% GDP in Q1 of 2022. Now, that said, they did a second reading of the Q1 numbers, and it actually was a decline. It was a negative 1 point something. So the first reading was 3. So this is kind of old, 3.5,
Mhm.
and then they reduced it to a deficit. So we actually declined. Obviously, we got the war in Ukraine and the China lockdowns. That's going to slow stuff down. Fannie Mae's expectations for a modest recession in the mid half of 2023.
I think they're a little behind on that. Yeah.
And then Fortune magazine talks about housing impact on recessionary pressures. Now, here's what they're showing. You can't see the graph because I'm looking at it and I can't switch it around. But in January 18, we had 1.4 million available single-family homes in the inventory. Going towards the end of 2019, you're up to a peak of 1.6 million, actually more than 1.6 million in inventory. And it goes all the way through to January 20. Not till 21 did we start
Dropping.
declining in inventory. And they're quoting here because currently we have an increase in housing inventory, but the number is 740,000
Yeah.
from a peak of 1.6 million to 740,000.
Yeah, almost
It's
half.
showing that we're slowing down.
Mhm.
That said, it's going to be a pretty soft landing, I think, for housing, because we still have an inventory issue.
We
People still want to buy
definitely do.
homes.
Yeah.
People still want to live in homes, not necessarily apartments.
And I think that works out to a housing shortage, really, of about 4 million houses, places for people to live that we are short.
Yeah, people place it between 3 and 5 million.
It's a lot. And 4 falls right in between that.
You picked right down the middle.
They're talking about
Right.
the expensive suburbs now. So areas outside of the larger cities, basically the top 10 most popular markets, and they're roughly 30 minutes away from a city center.
Yeah. And that's outside of Seattle is number 1. Wow. I'm surprised at
Yeah,
that.
I mean, you got just outside of DC, just outside of Denver, Tampa. Seattle's on there twice.
Yeah.
Los Angeles, Atlanta. Los Angeles is in there twice. St. Louis and Denver. So you got Golden, Colorado, Baldwin, Missouri, Johns Creek. I've never heard of Johns Creek, Georgia, so it must be a new developed suburb. But those are all rising very high in prices because people are still moving to these areas. They're trying to get out of the major cities.
Johns Creek is next to Alpharetta.
Said more than half of the 15 largest cities in the U.S. actually lost population after the pandemic and to current, which is not a surprise to us. We know people are migrating out to less expensive areas.
Did they say that more than half of the states or the cities lost population and then more than half gained population? I didn't know if it was that in depth.
Yeah.
I
Where did
think
they go?
I'm kind of thinking that's a given. But nationally, the typical suburban home gained 66,000 in value, and the urban equivalent was 61,000 in value. So they're not going up. They're all going up. They're just not going up as fast in the urban settings.
Mhm.
Now, I'm just going to go here to this Redfin thing. So
These are the states that we were talking about before. If you go on down there, it talks, or the cities, keep going down a little bit.
I'm going to stop right here for a second. So these are the share of homes that had a price drop in April. And
Right.
Boise, Idaho, for example, had a 40.8% of the homes had a price drop, but the share of homes
In April of 2022.
in 2021, it was 10%. So you're seeing more people basically dropping the prices of their home. Cape Coral is 32%, and last year it was 18%.
New Orleans
Now-
and Baton Rouge are both at 31%. Philadelphia's down 30%. I'm surprised Northport, Florida is down almost 30%.
Yes,
Surprised
but,
any place in Florida.
but if you look at over here, the median price of 2020 to April of 2022 for Boise was up 61%.
Yeah, they had the greatest. All these towns also had the greatest increase.
All of these
Except for
were
Philly.
Yeah.
were way up. Yeah, Philadelphia is only 11%.
That's right.
Indianapolis was 27%. But every one of these things have gone through the roof, essentially.
Yeah.
And now they're just, people are not paying as much, or they can't afford to pay as much.
Right.
Yeah,
So,
it's
yeah.
adjusting back down.
Or we
But-
call it the bubble has burst.
My point to this is it's not, the sky is not falling in. It's being readjusted to trying to be more normal.
Well, and I think that's what's important for us to take away from things that we learn about and read about for numbers that they're putting out. It's not, anything to panic about.
Mm.
It's information you use to make good decisions for the future. And that's what this is. Oh no, should I stop investing? Or, should I sell off all my properties now? Or should I change everything I'm doing? No. Stick with your numbers.
Yeah, they
Make
have to pencil
decisions
out.
but based on what's your exit strategy, and are there two? If you can't short-term rent it, can you long-term rent it? You just have to make sure that you're being smart with your decisions. It's not, hey, let's buy this house and hopeful that the pricing will go up while I'm renovating it in the neighborhood anyway, and then I'm going to get more for it than I should. Because that's really what's been happening over the past few years, and we need to understand it's
And you have to
done.
understand there's still deals out there. I mean,
Lots.
I've bought four properties in the last month. 3 of them were off the MLS,
Mm-hmm.
and it was still a really good deal.
Mm-hmm.
Like they are still out there. It's where are you buying,
Right.
and it's how. So I mean, we say this all the time. You make your money when you purchase.
Right.
So it's how you buy it, and then you don't speculate for future adjustments in
Right.
value. If you're buying to rent, or if you're buying to fix it and sell it, use data, not forward facing. Use current data.
Right.
So that's a good segue into, oh, by the way, lastly, use that link. I think they have a great little site there, and you can subscribe for their newsletter.
The
It's got good-
Stessa.com.
Yeah, it's got good info. It's over there in the chat box. So,
Now it's on the screen.
Wendy, since you're the short-term rental queen, what does your crystal ball
Oh,
say?
no. Well, this is one of the reasons why I really love doing the Wednesdays with Wendy when I do, because yesterday, my first call, I thought I was signing up with one guy, and I open it up and there's a group of 6 people in front of one camera, and then another guy that wasn't in the room, so he was on a separate camera. So there were 7 people that are they're all grown men who are in different types of jobs
There's
that
some
they
people
do.
who say men aren't grown.
Yeah,
They're just bigger boys.
but they're all, well, that's true pretty much all the way around. But they are interested in getting into the short-term rental business. And when I asked them, what's your end goal? What is it that you're looking for? Their first thing was, we want to be in resort areas that we want to go to, which is great and wonderful. And then of course, they want it for cash flow, investing, and that kind of thing. And what it forced me to do is, my first thing is to shoot holes in everything that's in front of me,
Mhm.
because I really want to look at worst case scenario first. And
Don't step on her farm unannounced.
yeah, I've got a sign that says that too. So I really wanted to make sure that I was giving them the ugly first, all the mistakes that you can make getting into it. And really, one of the biggest mistakes you can get is having in your mind the destination area, because the list that we just talked about, housing cities that are dropping the prices in their housing. They're all destination type cities or really large cities. In fact, on the 25 list that we did last week, 2 of the top in the 25 is Asheville, North Carolina, which is in the mountains, and the other one was Myrtle Beach, and the surrounding areas of Myrtle Beach. We've always been hesitant about lending in resort areas anyway, because we know that it goes up and it goes down. It's very bubble bursting. So, what happened when the pandemic hit is there were even counties that wouldn't allow you to book short-term rentals. So everything is very volatile, or more volatile, I should say, when you're in more of a resort area or a big destination rather than Anytown, USA.
Yeah, and also if you're entering into a recession or a recession-like event, what are the first things that people stop doing?
The fun stuff.
The
extracurricular activity gets cut off first. When COVID hit in 2000, was it 19, I guess?
20.
Oh, it was 20. So, we have properties here in Rock Hill and we have properties in Florida, but the ones in Rock Hill, which is Anytown, USA, small town, 30 minutes from Charlotte, we were full. And then all of a sudden we had, I'd say 50% of our bookings canceled, but within a week I was full again because the people that were coming for funsies now were coming to work. That's all. The contractors could still work and that kind of thing. And we actually had 2 of the best years we ever had in short-term rentals during the pandemic issues. I have friends that have places in the mountains and places at the beach, and they had a moratorium. They could not take reservations. They didn't have money to take anyway. But it's those kind of things that you really need to think about, is really what is your alternative if for some reason you've got that black swan event that happened, or maybe your city, whatever city you're in or county you're in, decides they're not going to allow short-term rentals anymore. And that's happening everywhere, even here in Rock Hill.
It comes down to, like we said, like buying it right. Like when you analyze a short-term rental, do you analyze it at making $5,000 a month for $200 a night? Like, no, you probably don't, right?
No, I analyze it on, if I can't rent it out short-term, can I cash flow on a long-term rent?
So ironically, Myrtle Beach was listed on Realtor.com's 10 least expensive or most inexpensive vacation destinations.
Right. You know why?
It's the median. They're going by the median price.
Yeah. But there's so much inventory available in Myrtle Beach now to spend the night, whether you're in a condo, whether it's short-term rental, hotel, whatever. There is so much inventory there that they're having a race to the bottom on what they're going to
they
charge.
have 100 and some odd golf courses there, and there's a condo on every golf course.
Yeah, that's true. And it is it's a great place to go. I'm not dogging Myrtle Beach. I like Myrtle Beach. It's not a place that I go to, but it's good for everybody else.
Yeah, as an investor, you have to be mindful of
another one was
things.
Morehead City.
Yeah. So we just got to be,
beautiful areas.
You've just got to be careful. So what is the future of short-term rentals? Who knows? We really don't know. Just like, what's the ride share stuff? Uber and Lyft, and what they've gone through, the taxi cab companies trying to fight that, allowing them to continue. We're having the same thing in short-term rentals dealing with hotels. Hotels have a pretty big lobby. Not the lobby of the hotel, but you know what I mean?
Yeah.
So it's really it's really tough to fight them, and cities and counties don't really understand it. Although they can make the tax money off of it, occupancy tax and things like that, putting that into place. People who do Airbnb or short-term rentals, we don't care about paying tax. We're happy to do it because we want to pay our fair share. But cities kind of have to get it together and understand what short-term rental is and what it has available. So, but I think it's been introduced so much and it's so popular now that people prefer staying, there are many people that prefer staying in a short-term rental rather than a hotel, because
Mhm.
you've got, a den, a living room, or full kitchen. You might have 2 bathrooms. You've got room to spread out for pretty much the same cost that it would cost for you to stay in a hotel.
One of the things you need to keep in mind too is that as we look at recession resistant properties that we lend on, if there's nothing wrong with having a experience type of a short-term rental, but if you're going to have multiple short-term rentals, I would get one would be an experience type of a place. The rest of them would be stuff that is geared towards monthly rentals or 2-week rentals for contract employees,
Yeah.
because those, they're still going to have to do this.
In smaller expanding
Mhm.
cities, near
Yeah.
medical centers,
Yeah.
stuff like that.
Mhm.
Yeah.
And then those are also going to be the ones that you're going to be able to rent long-term if it comes down to it.
That's absolutely true. And
And you're going to get them for a lot less money.
well, and when you're doing short-term rentals, people are living there short-term. You can buy the house that has a terrible floor plan where you have to walk through a bedroom to get to another bedroom.
Yeah.
You can have the house that has a really bad lot in the back that goes straight down.
Or on a main road.
Yeah, main road is good because people want to be able to find it easily. So
You don't have a lot of competition for that.
Yeah,
type
yeah.
property.
But that house also may turn into a long-term rental at some point. So you just have to be aware of all of that. Understand that you want to stay out of HOAs, of course, and anything that has other restrictive covenants. You want to make sure you're very careful about. But just what is the future of short-term rentals? It's the same that it's always been. It's people, again, are going to have a place to stay when they do travel, and it's not all for fun. They travel for business. A lot of corporate rentals.
One piece of advice, if you're using any of the websites, and I don't have to name them, everybody knows what they are.
VRBO,
Verbo.
Like I said,
Working,
I didn't have to mention them.
Booking.com, Booking.com, Airbnb,
But
Furnish Finders.
If you're smart, you're going to make sure that you have cards and pamphlets and that type of thing that has your direct information, have your own little website,
Mhm.
so you can constantly market those people to
Yeah.
come back.
We have it on our floor mat. Our direct website is on our doormat at the
And
front
then-
door.
Because otherwise you're depending on another company for your booking.
And you don't know what they're going to change.
Yeah. So there's a lot of people that do Amazon stores where
Mhm.
you don't get any of the contact information of the people that buy from you,
Right.
but you can certainly put inserts in your packages
Mhm.
where they can buy from you directly.
That's right.
Yep.
That's right. It's a
And
good
you can
point.
control your own destiny. So do that with your short-term rentals as
Just
well.
be smart.
Yeah.
Stick with your numbers.
Okay, folks, we've run a little long. Part of that was my problem because I wouldn't shut up. So thank you.
Recurring events.
Thank you for joining us on the Real Estate Investor Show. Hard money for real estate investors. We are Carolina Capital Management, and we make loans to real estate professionals in the Southeast. If you're interested in funding your project, go to carolinahardmoney.com and click on the Apply Now tab. If you are a passive investor looking for passive returns, click on the Accredited Investor tab.
Is he trying to see how slow you can say
Yeah.
things?
Are you?
I'm thinking of the drink. Remember tab?
Oh,
Oh,
okay.
yeah.
Okay.
Yeah, that came to my mind too.
Well, see, I'm so old that's the kind of things.
We
I
get
think
it.
of now. My birthday's almost here. What else? Oh, don't forget
Goodbye.
to like, share, subscribe, hit the bell, and don't forget Wednesdays with Wendy. You guys have a great week.
See ya.
I'm off to Florida.